Today on 5/25, Costco just released their third quarter earnings. We'll go through the press release page by page, but let me just give you a high level of what happened. They did beat their earnings by 3%, missed on revenue by 0.6%. Expected EPS was $3.20, they reported $3.30. Expected revenue of $55.6 billion, they reported $55.3 billion. The stock is down after hours, 0.4%. They're currently trading at $487, which is a good amount below their 52-week high of $564. Market cap of $215 billion. Let's go through their press release page by page so we know exactly what happened. The quarter they just reported ends May 7th, 2023. Net sales increased 1.9% to $52.6 billion from $51.6 billion last year. Revenue for the trailing 9 months increased 5.5% to $160 billion, up from $152 billion. When you compare this quarter to the same quarter last year, revenue in the US is flat. In Canada, it's down 1%. In other countries, it's up 4%. So total warehouse revenue is up a little bit, 0.3%. On the other hand, e-commerce revenue is down big, down 10%. Net income for the quarter was $1.3 billion, $2.93 per diluted share. That includes a non-recurring charge to merchandise costs of $298 million, or 50 cents per diluted share. When you compare that to the same quarter last year, net income of $1.35 billion, $3.04 per diluted share. Net income for 36 weeks was $4.1 billion. That's up from $4 billion in the prior period in 2022. They operate 853 warehouses. That includes 587 in the US and Puerto Rico, 107 in Canada, 40 in Mexico, 32 in Japan, 29 in the UK, 18 in Korea, 14 in Taiwan, 14 in Australia, 4 in Spain, 3 in China, 2 in France, and 1 each in Iceland, New Zealand, and Sweden. They also operate e-commerce sites in the US, Canada, the UK, Mexico, Korea, Taiwan, Japan, and Australia. Here's their income statement. For the quarter, revenue of $52.6 billion, last year $51.6 billion. And for the trailing 36 weeks or 9 months, revenue of $160 billion, last year $152 billion. $1 billion of membership fee revenue, so total revenue $53.6 billion. Obviously, they need to buy all the products before they sell it to us. All the food, all the toiletries, and that costs $47 billion. So they pay $47 billion for the products and charge us $52 billion. Really slim margins. And then they have other expenses, selling, general, and administrative expenses, like marketing, TV commercials, payroll, the rent for the warehouses. That was $4.8 billion. So operating income $1.7 billion, down from $1.8 billion. They spent $36 million of interest on their debt, up a little bit from last year of $35 million. They received $128 million of interest on their investments, up from $71 million. Income before taxes $1.8 billion, $469 million of taxes. So their net income is $1.3 billion, down a little from last year. That gives them an earnings per share of $2.94, lower than last year of $3.05. Earnings per share in the trailing 9 months, $9.31. The year before that, $8.96. They currently have 443.8 million shares outstanding. Last year, 443.7 million shares outstanding. So they added 100 million shares. Let's look at their balance sheet. The balance sheet starts with assets. The assets are listed most liquid to least liquid. They have $12.5 billion of cash, up from $10.2 billion. They have short-term investments of $1.2 billion, up from $846 million. These are probably treasury bills and bonds. $2.5 billion of receivables. This is how much money other companies owe them. Inventory of $16 billion, down from $18 billion. Other current assets, $1.8 billion. Other current assets are liquid assets, but they're insignificant. They're not big enough to have their own category. Total current assets is $34.3 billion, which is higher than current liabilities of $31.7 billion. So their current ratio is above 1. Then you have non-current assets, property and equipment, A bulk of this number is the cost of their warehouses. When they buy a warehouse, they put it on the balance sheet and depreciate the value over its useful life. Operating lease right-of-use assets. These are assets other companies own that they lease. The value of these assets is $2.8 billion. And they owe $2.5 billion on these assets. You can see it right here, $2.5 billion of long-term operating lease liabilities. Other long-term assets are $3.7 billion. So total assets, $66.8 billion. Let's look at their liabilities. Current liabilities is how much money the company owes within the next 12 months. $17 billion of accounts payable. This is how much money they bought on credit from other companies. Accrued salaries of $4.1 billion. And accrued expenses when a company incurs an expense but hasn't paid it yet. This is probably more of a timing thing. Because say you get paid every 2 weeks from your job. You don't get paid every single day. You're accruing payroll. And at the end of 2 weeks, your company cuts you a check. Say it's 1 week into the month. Then that company owes all their employees money. They're accruing debt, but they haven't paid it yet because payroll is the second week of the month. Accrued member rewards, $2.1 billion. I earn member rewards throughout the year, but Costco doesn't cut me a check for the rewards until I think April of each year. So they're building up a lot of debt over the year until they actually have to pay their customers. Deferred membership fees, $2.4 billion. So if you pay for a 1-year membership, let's just say it costs $120 per year to be a member. Costco puts that $120 on their balance sheet in deferred membership fees. Each month you use your membership, they take $10 off this and put it onto the income statement as revenue. Just because you paid Costco for the entire year, they can't book the revenue until you use their service. So each month they book the revenue. And then after 12 months, they would have booked your entire $120. And then if you want to do another year, you pay them, and it keeps rolling like that. But when you have millions of members, this number really adds up. Other current liabilities are debts they owe within 12 months, $6.2 billion. $32 billion of total current liabilities. Long-term debt, $6.5 billion. So this is debt due beyond 12 months. They owe $2.5 billion on the right-of-use assets. Right here, operating lease right-of-use assets. That's the value of the asset. That's how much they owe on those assets. Because the assets are owned by someone else. They're leasing them. Costco is leasing the asset from another party. Other long-term liabilities, $2.5 billion. That's what they owe beyond 12 months. These are smaller items that they just put into one category, other. Total liabilities, $43 billion, which is similar to last year. Let's look at the equity. They have 2,000 of common stock. Each share of stock has a par value associated with it. It's an arbitrary number. It's usually really low, like a penny or a tenth of a penny or a hundredth of a penny. Actually, it's right here. It's 0.005 cents. So it's 5 thousandths of a penny. So you take this number, 0.005, multiply by the shares outstanding. There's 443 million shares outstanding, and that comes out to 2,000. But you could probably just ignore this number. It's kind of meaningless. Additional paid in capital, that's how much money the company raised from issuing stock. Let's just say for argument's sake, they IPO'd at $20 and issued 1 million shares. Then if you looked at their balance sheet right after they IPO'd, this would say 20 million. Actually, if you want to be technical, this would say 50,000, 0.005 times a million. Additional paid in capital would say 20 million minus 50,000. So 19,950,000. That would be how they record it. If you're interested in this stuff, watch my videos connecting the financial statements, and I break this down pretty clearly. Or leave a comment and I'll reply with a link of that video. Accumulated other comprehensive loss. These are unrealized losses of 1.7 billion. You have unrealized gains and losses on your stock. Let's say you paid $10,000 for AT&T stock, and now those shares are $9,000. You have an unrealized loss of $1,000. You didn't lose anything until you sell the stock. And once you sell the stock, then you can get a $1,000 deduction. You can apply that $1,000 loss to another stock gain. Same thing if your stock is up, you have an unrealized gain. You didn't make any money until you sell the stock. And once you sell the stock, then you have to pay taxes on that gain. So they have 1.7 billion of unrealized losses. But this is not stock gains and losses. This is usually on things like pension plans and hedging contracts. Let's say they have a $1.7 billion unrealized loss on foreign currency hedging contracts. Since they have locations all over the world, they hedge against foreign currency. They won't have to post a loss until the contract is realized, until the contract is fully executed. Retained earnings of 18 billion, this is the sum of all their prior net incomes, and that's up from 15.6 billion, so they're a really profitable company. Total equity of 24 billion, liabilities and equity 66.8 billion. You'll notice that's the same amount of assets they have, 66.8 billion. The balance sheet always has to balance. So that's the end of the press release. They don't have the statement of cash flows. And they haven't released their 10Q yet, so I can't go through that. So to summarize, I love Costco. It's one of my favorite stocks. The company is getting so big, so it's hard for them to make big leaps in the market. Although Nvidia is a lot bigger, and today the stock went up over 25%. But sourcing is really big for this company. If prices of produce go down 1%, their profits go through the roof. Or if the cost of meat goes down 5%, then margins go up a lot. But on the flip side, with inflation and things getting more expensive, it really squeezes their margins. So I hope you learned something new in this video. Comment, subscribe. Talk to you soon.